Our starting point tonight is in East Africa, where Ethiopia looks set to be the next sovereign defaulter in Africa. After talks with key holders of the country's $1 billion Eurobond due next year ended without an agreement. Now, this comes after Ethiopia announced that it could not pay a $33 million coupon that was due on Monday. Non-payment effectively put Ethiopia on track to default after the grace period of 14 days expires. Prior to this, Ethiopia had secured an interim agreement on a debt service suspension for 2023 and 2024 from its official bilateral creditors. In the meantime, Ethiopia is seeking a 4-year bailout facility from the International Monetary Fund. Discussions with the government are currently ongoing. A staff visit is likely to take place in early 2024. Let's dig into a bit of analysis on this story. Tilewa Adebajo is the CEO at CFT Advisory. He's joining us from Lagos, Nigeria, for a deeper look on this particular matter. Thank you for your time this evening. So, Ethiopia is due to hold a wider call later this week with the other holders, right, of the $1 billion note. Might this pitch to a wider audience for a restructuring plan succeed when talks with a much smaller group did not?
It's very highly unlikely because, you know, the bondholders are no-nonsense people and they always demand their pound of flesh. As you know, Ethiopia has already undergone debt restructuring under the G20 committee, which was done in 2021. So they already have debt service suspension agreements with a lot of their official creditors and some of their commercial lenders already in place. But the bondholders are not agreeing to this. And the key challenge for them is the maturity and the size of the coupon repayments. And I think that is really where the challenge is. Ethiopia is seeking an extended moratorium period. The bondholders want a shorter period, and Ethiopia is looking for a smaller coupon yield, while of course the bondholders want a higher yield. So we look forward to this meeting on Thursday to see if we could break that deadlock.
Indeed, and just to put some color on that particular, on the proposals from both sides, the Ethiopian proposal, from what I read in this particular briefing of their meeting, is they're saying they want the coupon rate to come down to around 5%, but they're also essentially looking to push out the maturity of this bond to around 2023 and they start payments in 2028. I think the only thing really that both sides sort of agree on is start payments in 2028 if you restructure, but the repayment period will be a lot shorter. Do you see any sort of room for compromise here between these two positions?
Definitely. I think you probably reach a compromise because the bondholders are looking for about 6.5. So the variance is just only 100 basis points. So I think they'll probably meet halfway because the bondholders want to see the coupon payment. They don't want to see the coupon payment stop. And I think Ethiopia is trying to bargain, buy some time. And as you said in the earlier presentation, they've now gone to the IMF, and hopefully they could get some bailout from the IMF to be able to help them appease the bondholders once they reach an agreement with the bondholders.
Looking forward into 2024, what are Ethiopia's options for restructuring at this point? And I'm working off the assumption that come Thursday, they don't essentially end up with an agreement of some sort on how to essentially, push out maturities, perhaps keep the coupon rate essentially at a slightly lower level. Because I'm looking at a country here that has a diminished amount of FX reserves, a country that may not necessarily be able to get a bailout from the IMF, perhaps at best maybe Q1 or Q2. 2024. They don't exactly have time and money on their side. So what are the options?
Well, the Ethiopian economy is one of the most underrated economies in Africa. Its population is only second to that of Nigeria. And if the government in Ethiopia continues with its structural reform programs and liberalization of its economy, it could unleash significant potential with privatization. It just recently allowed foreign banks to invest in Ethiopia, and they're just setting up their stock exchange. So they have a lot of reforms that they need to take to be able to unleash the potential of that economy. And I think that this might just be the time for them to do that and get the necessary reforms to open up the economy and to be able to attract the necessary levels of foreign direct investments and for that economy to reach its potential. So I think they will reach an agreement with the IMF. But I think this agreement with the bondholders, especially the Euro bondholders, is very, very important to be able to instill confidence in that economy. And, $1 billion, considering the size of the Ethiopian economy, is not something that should be posing Ethiopia a problem. And I think that they shouldn't go the way of both Zambia and Ghana because it will not help their perception in the international capital markets and even within the African continent as a whole.
Indeed. I'll get to the wider continental question in a bit, but I want to push back a bit on what you've just said, because a Eurobond investor could say, look, we heard back in 2018 from the Prime Minister then that he wanted to liberalize the economy. He laid out the plan to essentially set up a stock market, to open up the banking sector, to essentially liberalize or sell some stakes in some companies, everything from Ethiopian Airlines to, liberalizing parts of Ethio Telecom. But out of all those things that he wanted to do, he's only managed to pull off the partial, the entry rather, of a different company into the telecommunications sector. Banking, we're still setting that up. Ethiopian Airlines is still essentially 100% government owned. A Eurobond holder would say, look, there's very slow progress here. What guarantee do I have that when you say you're going to open up your economy, you'll actually implement what you're saying?
Well, I think the issue is intent. I think the stock exchange is also very important. And I think the opening up of the banking sector, I think, will help a great deal. So while those reforms have been very slow and they're not instilling confidence, Ethiopia needs to show that it can sustain its international bond obligations and while this is happening. And I think it's in Ethiopia's interest to be able to make sure that they reach an agreement with these bondholders and continue to service those Eurobond debts. Yes, reforms have been slow, but necessity sometimes is the mother of invention. So when they're getting close to this and they're under this type of pressure, it is this type of pressure that actually drives structural reforms and privatization. They've started the privatization of the sugar estates, and they've been quite significant foreign interest in that. Proceeds from all these privatization efforts, I think, could come in, and they could use the World Bank as a bridge loan while these funds come in. So I think that is what they need to begin to talk to the World Bank and the IMF to provide them with the bridge loans while pending a lot of their privatization and their reform efforts.
All right, then one final question for you. The continental perspective, it does matter because, whether you and I like it or not, the fact is that somewhere out there in Western capitals, Africa is still viewed as a country rather than as individual economies with their own distinct characteristics. So, of course, now we've got this wall of Eurobond repayments, right, that are due in 2024 from various countries. Zambia, Ethiopia, Ghana essentially have defaulted or about to default. Is there any other country that has you concerned?
Well, every country in Africa is at risk. While the global economies are recovering and inflation is under control in most of the global economies, African economies still have a challenge with stagflation and especially with foreign exchange liquidity. So all across the continent, you see these challenges in Africa. We have not been able to get out of this significant problem, and we need to see growth. So a lot of African economies are still under risk. And, it's just a question of time. And most of these African countries are financing their budgets with deficit. They're doing deficit financing for their budgets. So all across the continent, there's still challenges. And one just has to be very careful to see how things are working out.